What's up? What's up? What a day. What a week. What a time to be alive. Just like, oh man, just crazy. Just crazy, crazy, crazy. Um, so let's get into it. Bitcoin, I talk about Bitcoin all the time. I talk about the economy. I talk about inflation. I talk about all these things. And what we've seen this past week or so, I mean, really this past 14 months, but really dramatically in this past month or so, is just been like all of that coming together, you know? So, all right, let's get into it real quick. So, the most dramatic thing today is the price action on Bitcoin. Okay. Now, I'm not a proponent for Bitcoin to get rich. I'm not a proponent for Bitcoin, as like, let's buy it and make a lot of money. If that happens, great. But a year ago, I mean, $20,000. Today, $61,000. It got up to 64. So what's happening? Why is this happening? Why has it gone up so dramatically, face ripping this past week? We're talking 17% in a week, right? What is happening? Is this the end? What's causing it? Well, those are all great questions. Okay. There's a lot of things happening there. And I think, my thesis of Bitcoin is it's a hedge against inflation, a hedge against mismanagement of our finances by the people that we trust with them, the government, right? It's a store of value, right? So you want to protect your purchasing power because we work very hard and we trade a lot of time for money. That's what we do. We own businesses, we work a job, whatever it is that we do in our lives, we're spending time away from our families. We're making a lot of sacrifices no matter what you do in life, right? If you contribute to society and you work hard, you're sacrificing your time to earn something in return, and that's the US dollar. And through the debt growing and all the things that have been happening, we've seen the erosion of the buying power of that dollar. And it's clear in inflation, right? When you go to the grocery store and things cost 40, 50% more, that's the theft of your time, right? So your time is worth less. So that's what a store of value is. So that's my thesis on Bitcoin, store of value, okay? So if we go back a little bit in time, okay, Bitcoin runs in cycles. So the all-time high in US dollars, it says 65 here, but this is kind of a funky chart. It was $69,000 in November of 2021. So what happened today, we got all the way up. It was 64,000 or so, and then it pulled back a little bit. So we've almost hit the all-time high. But there are other countries, like I just want to show you, okay? So when we talk about inflation, it's like the US dollar is the least of all the bad things out there, right? So every other currency on planet Earth is not as bad as the US dollar, okay? But that doesn't mean the US dollar is great. It's not. So how do we know that? Well, we look for a common denominator, which is Bitcoin that's traded in every currency on Earth. The Canadian dollar today, Bitcoin hit the all-time high. So the all-time high in US dollar is 69,000. We hit 64,000 today. So we haven't quite got back to that yet. Canada already hit it. So what does that tell you? That their dollar, when you use that common denominator of Bitcoin, their money's worth less, right? Some other countries today, Australia, Vietnam, we already know Argentina and Lebanon and Turkey, these countries where those poor people have been robbed of all their time and energy by their government totally mismanaging, those countries have been hit the all-time high. But now we have real countries that you would consider our peers. I mean, Canada's in the G7, right? Australia's a first world country. These are countries that are already all-time high. So that shows you, my thesis of why I believe in this thing is the store of value is how fast value is eroding in the currencies that we work so hard in our countries. So what is pumping it, right? It's not just magic that's pumping it, right? It's supply and demand, okay? So any other thing on earth, and this is what fascinates me with Bitcoin, is there will only ever be 21 million Bitcoin. And right now it's like 19.6 million or whatever it is. And many of them have been lost that will never be recovered. So there's really less. But look at gold, okay? Gold has been around thousands of years. There's probably a lot of gold that we haven't found yet. We don't know how much is out there, right? There's probably a lot of gold that we know about, but it's just too expensive to get it, But if gold gets to a certain price, 2,000 an ounce, that gold's too expensive. 2,500 an ounce, it makes financial sense to go get that gold. So we're adding to the supply. So when there's a huge demand for something and we can add more supply, all right, United States dollars, there's a demand. Walk in any country in the world and try to spend dollars, they will take it. Even the countries that hate America, North Korea will take your dollars if you show up there. Guaranteed. Okay. But what do? We need more dollars. We print more dollars, right? I work in real estate. Real estate's a great store of value, but you can easily build more real estate, So there's, so what fascinates me about Bitcoin is that it's a fixed thing. It can never, no matter how high the demand gets, supply can never increase to meet the demand. So, like I said, there'll only ever be 21 million. We're like 19 million and change in, so every day there are 900 Bitcoin that are mined, right? You hear in the news, Bitcoin miners, it's bad for the environment, blah, 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 all that. Okay. So 900 are mined. So when you have a massive demand increase and the supply is fixed, what happens to price? It's economics 101. So why do we have this massive demand increase? So I think what's really driving it right now, all right, is the ETFs, okay? BlackRock, Fidelity, ARK Invest, all these companies have all just legitimized it. They've put it in your 401k. Whether you hate Bitcoin, love Bitcoin, it doesn't even matter anymore because they're putting it in your 401k. A lot of you probably own Bitcoin and don't even realize it in these index funds and stuff like that. So in the past month, since these ETFs came out, every day when you buy a share of BlackRock's IBIT, when you buy a share of Fidelity's FBTC, whatever you buy at the end of that day or whenever that time period is, that company has to buy Bitcoin to put into that fund to track the rate of Bitcoin. So this happened about a month ago. So 1 month ago, right here, I'll show you this. 1 month ago, these went live. They all went live. It was in January. And so right here, January 11th. So they went live at 27.94. So what happened? Kind of a little bit of a sell-off right there. All of a sudden, bam, 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 bam. That's it. They're all just climbing. They just track the price of Bitcoin. They move almost in sync. You can see it here on this chart. That was Bitcoin yesterday, 4.28%. They all within a percentage point. But let's look at IBIT at the top. That's BlackRock, okay? The biggest, evilest, whatever you want to call them, company in the world. They own everything, whatever. It is what it is. 41 million shares of IBIT yesterday. So that's around 9,000 Bitcoin that they have to buy to fill the fund, right? Gold ETF, they got to own so much gold to back it. S&P 500 ETF, they got to own all those shares of those companies in the S&P 500 to track that index. So these ETFs track the price of Bitcoin. So if I sell 41 million shares today of my Bitcoin ETF, I need to go buy that Bitcoin to fill up my books so I can accurately track it and be in compliance with the SEC. 11 million for Fidelity, ARK, 3.5 million, right? So that's 10,000 Bitcoin a day now that need to be bought. And these companies, they're not going on Coinbase. They're not going on Robinhood and buying it. They buy it over the counter, but there's only so much available. So what's happening is that this is the price action. Like this is the number one contributor and you're seeing it now. It took a month. Right? And it's only growing because BlackRock and Fidelity, I mean, what did they spend to get these ETFs approved? Because they know. So they're pushing it and they're pushing it hard. So you have the scarcest asset on earth that cannot be created more. You can't add more to it. You've increased the demand to this insane amount. It's 10 times the current supply that's created every day. It's a fixed supply schedule. And I'm going to get to that in a second because something big is coming in April, right? So you have all this demand, bam, right? So just all of a sudden, demand through the roof, supply fixed and lowering, price goes up. That's just how it works. And it's crazy, right? And, so what is the utility of it? I mean, it's an investment like anything else. It's a store of value, right? A store of value. So obviously, Jim Cramer, he's not too happy. That guy, if you know about the Cramer effect, if he says something's good, it goes down. If he says something's bad, it goes up. But he's not happy at all, all right? So, all right. So getting back to these ETFs. So this is what's driving all the price, right? But there's something else happening soon, right? So, people say, all right, is it too late? Did I miss it? I don't think so. I really don't. Because inflation's not like, let's back out and look at my thesis on this whole thing and why I believe in it, why it's a store of value. Is any of that changing? Is the government suddenly lowering the debt? Is the government going to stop printing money? Are we as a country, is our government going to manage our finances better? Is inflation going away? Right? You know what I mean? Like none of that is changing, right? So what is going to happen though, right? So right now, there's a lot happening today and it's just so dynamic. So, this might be a little scattered, but it's just, I want to get this out there and kind of get the conversation going. And then over the next few days, we'll track it and see. But every 4 years, so I said Bitcoin, there's 19 and change, right? 19.6 million, call it, available now. 21 million will ever be minted, right? Or created, mined. 2140, that's the year that the last Bitcoin mining ends, okay? So the next 115 years. Every 4 years or so, the amount is cut in half. So these Bitcoin miners, they run the network, they do the algorithms, they use electricity, and it secures the network. That's the value, right? That's the tangible thing that makes this Bitcoin what it is, okay? Just like when you're mining gold, you have machines that have to dig in the ground, you have chemical reactions that have to occur, you got to dig it out, you got to ship it, all that. It's the same idea. Everyone says Bitcoin's so bad. Any other commodity on earth requires the same amount of effort and energy. So these computers that power the network do complex algorithms to secure the network. Every 4 years or so, the amount of available supply cuts in half. So in April is coming up to that 4-year mark. So the amount of daily Bitcoin will go from 900 to 450. So we have demand of 9,000, 10,000 big just from these ETFs that didn't exist before January, okay? And every time there's been a halving, they call it a halving every 4 years. This is like the fourth one. Every time it's happened, it's been very bullish, price action. The all-time high last time was as a result of the halving in 2020, 2024. So it's already set up to be bullish. But now we've added this demand that is unprecedented in history. And that's the mind-blowing part of it, right? Is like, what does that really mean? It means that I don't think we're too late. I think if you're looking for something that will protect your value as a store of value, I don't think you're too late. I think you're going to start hearing a lot more and more about it. I think you're going to turn on Fox News and CNN or MSNBC, whatever you watch, they're going to be talking about it. So I want to arm you with the real facts, no matter what. I think that if you're looking to store your energy that you expend in your life and every day that you work so hard to protect your future. And we've talked about retirements on here and the tragedies that have occurred through inflation and just how bad, like we got a raw deal. We really have been giving a raw deal. And, so this is one way to protect to store your value, protect your purchasing power. So I think personally, you ain't seen nothing yet. That's what I think, because nothing that goes into my thesis about this thing is changing soon. I don't see it, right? And rates are still high. Imagine when rates come down and everybody gets bullish and all this liquidity comes into the market. That's what drove the 2021 bull market, was all that money they printed for COVID just got thrown into the system and people had to spend it. And we've seen it in China. China right away, just last month, stock market's crashing. They just went right to what they know. Print that money, help them out, bail them out. So this is the hedge. Bitcoin is the hedge to secure your value that you've worked so hard for in your time. And we're seeing it now, and it's only going to get bigger. And BlackRock is selling this stuff. They're pushing it. Fidelity, it's going to be, whether you know it or not, all these ETFs that we have in our 401ks, they're all going to have it in there now. It's just going to grow from there. All right. And I'll leave you with one thing and then we're going to end it. So, S&P 500, that's kind of what everybody measures investments by, right? If they beat the S&P, they did well. If they didn't, then they didn't do well. So I saw something the other day, and I think it was over the last 10 years. If you held 98% cash and 2% Bitcoin for that 10-year period, you beat the S&P 500. Think about that. 98% cash, doing nothing, 2% Bitcoin, you beat the S&P 500. Had you put it all on S&P, you actually had a higher return. That's what's crazy. But again, Bitcoin's not a get rich quick. We don't invest to get rich quick. We invest to protect our purchasing power, to grow. It's a store of our value, all the efforts that we make every day in your business, whatever that is that you do, your work, no matter what, you have to always pay yourself first and invest in something that will protect your future purchasing power. So future you will look back and say, thanks, bro. All right. But yeah, I just wanted to drop a little nuggets on you guys. I got a few calls today from people that have never called me to talk about this stuff. So it's definitely out there. And, I just want to give you my perspective. We're going to be watching it. And over the next few weeks, we'll talk some more about it. All right, guys, take care. I appreciate you. Enjoy it. And if you have any questions, hit me up. I'm your resource and I'd love to help. There's a lot of misinformation out there. I want to make sure you got the real facts. All right. Take it easy, guys.